Good morning, friends. It's Friday, January 6th. I hope we have a great day today, and we're looking forward to a good weekend going forward. Where do we start the day as day traders? Well, for me, I start the day looking at the economic calendar, and I suggest that you do as well, because there are reports that come out several times a week, usually every week, that tend to move the market. Now, some of these reports come out pre-market, some of them during the market, but it's important to know the ones that are scheduled so that you know if there are going to be any reports that might cause a hiccup while you are trading, and an unexpected hiccup, I should say. And so yesterday, January 5th, an ADP employment report. ADP, of course, is Automatic Data Processing. It's a company that was started way back in the 70s, and they became one of the largest payroll processing companies in the country, and so they started issuing reports on labor rate changes, and so their report is included in the economic calendar. And yesterday, the report came out at 235,000 jobs added to the economy, where the consensus, the estimate, was 153. Tremendous jobs report. So what happened yesterday? Market went down, right? And so today, there's another jobs report. There's a Labor Department report, also a labor report, non-farm payrolls. The estimate was 200,000 jobs added, and the report came in actually at 223,000 jobs. Now, both these reports are announced pre-market at 8:30 in the morning. You see 8:30 non-farm payrolls report, ADP report came out at 8:15 pre-market. And so today we are on January 6th, and the market report came out, and it was better than the forecast. So let's move forward. So that's information, general information, tuck it away. The news this morning, and I look at the morning news mostly just to get a general glance at where the flags are. The flags are in the green. Futures, S&P futures, Dow, NASDAQ, they're all up. Oil is up a little bit. The 10-year Treasury is about where it has been. Nice numbers for the economy, right? And so there's so much talk about recession going forward, recession based on the Federal Reserve raising interest rates, and typically interest rate increases lead to declining economic prospects. But nevertheless, there's nothing sure baked into the market. So the morning news, beyond that, I look at it mostly for entertainment, if I have a little time to kill. But today I want to segue right into the S&P. Now, this is the Emini from yesterday, January 5th. And my trading zone, trading zone is a calculation based on Taylor's trading technique, and there are a couple of smoothing averages placed in there too. There are a dozen calculations that make it up, and it looks innocuous, pretty simple, but basically it is an indication of where the market is likely to trade on any given day. And so the market opened up going into the previous day's close, which I also have on my chart. I always place the previous day's close on my chart, which is an area of equilibrium. Why do I place the previous day's close on my chart? I just told you it's an area of equilibrium. It's an area where buyers and sellers generally agree at the end of the day there's a level of value in equities. So it's an important point. So now I have three important points on my chart. I have the previous day's close. I have my trading zone, and not just the total trading zone. There's more to it that meets the eye. There's a resistance number, or a support number rather, down here. There's a resistance number up here, and then there's the range between the two of them. So what happened yesterday? Well, as I said, the news skews the market. And yesterday, the ADP report came out, and right over here, ADP report came out just around 8:15, and the market had been moving to come in at equilibrium, which was the previous day's close right over here. And look what happened. As soon as the economic report, the labor report came out, market went down. Where did it go down to? It went down to the trading zone calculated support level. Why? Because it should have, based on the calculations. Remember, this is not guesswork. So the mathematical model, and it's a complicated mathematical model, was pretty accurate in telling me where the prices might trade. Well, in this case, they told me where the prices were going to end up. And so that brings us to today, January 6th. And January 6th, well, we had another economic report come out. And this time the report also was great. And what happened? Drove the market up. Again, the market was coming in at the previous day's close, right over here. Now, where is my trading zone? Well, my trading zone is a calculation that took me a long time to develop, and I make it available as a subscription. If you'd like to get it, it's not expensive. There's a monthly subscription fee. First week is free. Try it out at timelessdollar.com. Go to my website, timelessdollar.com, and you'll see right on the nav bar how to subscribe to the trading zone. It's a daily report. So my subscribers know what this number is. So here, what I have on this chart is then where the prices are right now. They were driven up by the non-farm payrolls report, and the gap opened a significant gap. And the gap trade, if it closes, it's worth, let's see, the prices are around 38.60, and we're down here at 38.28. So about a 32-point potential profit if the gap closes. I don't trade pre-market, and I suggest you don't either. But basically, let's see what happens today. We had a great economic report, payrolls report, drove the market up today. We had a great payrolls report yesterday, drove the market down. Does that make sense to you? Market doesn't make sense. But what does make sense is knowledge. You need to know what you're doing in the market. And even if you don't trade or you make a mistake trading, if you make a mistake, you should know what that mistake is and why it was a mistake. You should know what you're looking for. And that's what I teach in my course, Trading Mastery for Financial Freedom. And so I teach 6 trade setups. How difficult is it to learn 6 trade setups? The only thing that I don't teach, because I can't, is to tell you where the market will trade. I show you where the market should trade. But then again, the market gets skewed by things like FOMC reports, Labor Department reports, things like that. Nevertheless, let's have a great day today. January 6th, it's a Friday. Marv Eisen for Timeless Dollar Trading Academy. And thanks so much for watching. Trade safely, use lots of patience, and I'll see you in my next video.